Yo, what is good, boys? Today we're going to be talking about the 9 and the 21 EMA strategy, how I use it, how I can catch entries off of it, and also how it shows where the trend is going and what trend we're in. So, as you guys can see, if you go to indicators right here, I would go to your charts and search up moving average exponential. I'll literally delete mine and redo them just to do them with you. If you have them, you have them. If not, you need to use this and you need to implement this into your strategy because I can promise you it saved me so many times, helps me out to tell me where the trend's going. Obviously, you don't just want to, how can I say it? Just depend on this indicator. You should never depend on indicators. You should depend on price action, your daily bias, obviously what the trend's in, and market structure. Personally, that's how I determine where the asset or the stock or the ETF, whatever we're trading, is going to go. So go to indicators right here. You're going to click this 2 times. Boom, you need 2 of them. You see them over here. You're going to click 1. Here's the 9. And then this one's going to be the 21. You just got to change the length. That's all it is. 1 is the 21, 1 is the 9. Me personally, I'm going to do green, or I'm going to do black for the 21. And then for the 9, remember 9 is the length. I will do green because that is just the colors of my chart. So here you go. You can obviously see the indicators now. The lines on the chart. You see how like price has pulled back to this multiple times and has bounced off of it, and you could have caught trades off of that. Like, it's so efficient when you're entering trades as well on the 5 minute, even on the 1 minute. Like, let's say if we were to catch this uptrend down here, I would have gotten in around this area once we broke. Like just right here. Let's just look right here when the EMA crosses. So we're in a downtrend. The EMA crosses below. Okay, above. Look at this area right here. Do you see how price has non-stopped reject or bounced off of the EMAs? We were literally bouncing off of them EMAs so many times. So I'm going to show you guys right now how to use these. Obviously, I can't go over the whole entire strategy in this. I can't go over my daily bias and stuff, but I'm going to show you how they work and why we use them. So basically, the 9 and the 21 EMAs, they are a trend indicator. So when the 9, which is the green line, goes above the 21, that's indicating an uptrend. So let's just give it an example. Here, we got the 21 like this, and then it'll go like this. And that's how it'll turn into an uptrend. Remember, the 21's above it, this is the 9. So when the 9 crosses above it, and I'm going to turn this into green, look, imagine these are the EMAs. The green is the 9, the 21 is the black one. So see how the 9 is below the 21. That's indicating a what? A downtrend. So when the 9 is below the 21, that indicates a downtrend. Remember, write this down if you're confused, or just sit here and freaking be brain dead. You know what I mean? Take this shit serious, write it down, study the fuck out of this. When the 9 is below the 21, it's indicating a downtrend. Now, when they cross over and the 9 is now above the 21, that indicates an uptrend. Vice versa. I don't even want to draw it, but like I'll do it. Look. Or what would it be? That would be like this, right? Or something like that. Yeah, right? Wait, no, I drew that actually 100% wrong. I'm going to draw it out because I really want you guys to see it. So remember, this is the 9. This is an uptrend once this crosses above the 21. Now let's say we're in a downtrend. We got the 21 EMA. Or, yeah, downtrend, right? No, uptrend. We got the 21 EMA. We're in an uptrend. So that means what? The 9. Oh my god. That means the 9 is like this. No, it's like this. It's above it. I'm so sorry. When it crosses below. Sorry, I was getting freaking confused with these dumbass lines. All right, boom. Simple as that. Remember, now the green is the 9 EMA. When it crosses below the 21, that indicates an uptrend or a downtrend. Does that make sense? I'm mixing up my words a lot right now. I'm sorry for you guys that are fucking having a brain fart, but I'm sure you're understanding what I'm saying. 9 below the 21 as of now. Oh, crosses over, uptrend. 9 above the 21, crosses below, downtrend. Does that make sense? So basically, it's an indication of the trend when the 9 is above the 21, uptrend, when the 9 is below the 21, downtrend. Above, uptrend, below, downtrend. It's simple. So let's give an example. Let's just go to the 5 minute. So, like right here, I remember on Friday, I was looking at calls. Now, it was very choppy at first, and I was just waiting. You see how let's give an example. There's so many wicks, it's chopped. But look at the EMAs right here. You see how we come down, we're below it, and then we cross over, and we were steady staying above the 21 EMA. We were continuously in an uptrend. But let's go to the 1 minute so I can show you a better example. Right here, do you see how the 9 is below the 21? The green line is below the black. That's a downtrend right here. You see, we're in a downtrend. Now, right here was where we swept liquidity out on the 5 minute. I don't know if you guys remember that, but like if I go to the 5 minute, like you see how we're sweeping out liquidity, sweeping out. Plus, we're in an uptrend. So if we're sweeping lows out, and on the 1 minute, I'm looking at okay, we broke structure to the upside right here. We're pulling back. What's happening? Do you guys see this right here? The 9 crosses above the 21. And then we pull back to it and we're just steady bouncing above it. That means that the trend is obviously turning to an uptrend. Now, they can cross all the time. You need to use your daily bias first. You don't want to just look at the indications basically telling you, oh, we're in an uptrend, the 9's above the 21. Because, bro, it could swap every 10 seconds if it wanted to. You know what I mean? So you really want to use it along with your daily bias. So like me, I wanted to go long. I was just waiting. So it came down on the 5 minute. Remember, on the 5 minute, this was a sweep. On the 5 minute, it came down, swept out lows, boom, made an impulse move up. Remember, the 9 and the 21, they were already looking good on the 5 minute. So now I was just looking at the 1 minute. I'm looking at the 1 minute, seeing, okay, the 9 is below the 21 now. So I'm just like, all right, it's downtrend right now. We swept liquidity. Let's see if we can cross over. Make a high, a low, boom, broke structure to the upside. The EMAs cross. We're pulling back to the EMAs. You can enter right off of that. Literally. Wait, where's my bang long position? Like anywhere above here. Your stop loss obviously isn't going to be like this. It's going to be somewhere below lows, right? Either below this low, below these lows. I probably would have put it along this area. And look at this. Look at that risk to reward. That's insane. You know what I mean? Like if you are correct on the trend, you're gonna fucking bank, dog. You're gonna bank. If you see the 9 and the 21 EMA crossover and the trend is right, everything looks good, bro, you're gonna do good. Like it's as simple as like, okay, if your stop loss is like, say if the EMAs cross, you're bullish, you enter along this area, your stop loss is down here, bro. If it wants to drop all the way down, it's a high likely chance of, bro, your bias is wrong, and then what's gonna happen? It's just gonna continue to go down, right? Does that make sense? It's most likely just going to continue to go down. So your bias was wrong, learn, and do better. You know what I mean? I feel like the 9 and the EMA strategy, our strategy using liquidity and market structure, it really tells you like where the trend's going to go. And if you're wrong, bro, you're wrong. Or you just had a bad entry. Like, let's just give an example. Like, if it wanted to come back all the way down here to the order block and then go, what does that mean? What is this? This is just straight chop in here. And it sucks. And we got caught in it. Do better. Stick to your plan. Do better the next day. It's that simple. Don't get frustrated if you lose. Don't get frustrated if you get stopped out and then it goes into your way. The only thing you should be doing is wanting to learn how to get the better entry, how to determine your bias, how to understand what price action and what price is doing and where it wants to go. Does that make sense? So basically, like I said, when the 9 crosses above the 21, uptrend, vice versa, downtrend. Pick your colors. Remember, my 9 is green. It's just my charts. I like green and black. I don't like putting red on my chart. It just triggers emotions, in my opinion. I like the green and black. This shit looks tough. So, another thing that we can use the EMAs for is an entry point. So let's look at the 5 minute. As you can see, we were in this area and this zone of consolidation. Me personally, I don't think I want to take a trade off of it. I would have waited for the either a break of structure to the upside after the liquidity sweep or the break of resistance. So Down here, we swept liquidity right here. We took out these lows, filled all of this order. We made a high, a low, and then boom, we broke structure to the upside. And then what happens? Do you see a candle closure below these EMAs? Do you? Also, what happens? We inverse this fair value gap. We closed above it. And then what happens? Let's just say right here. Let's just say we wanted to enter right here. This is a perfect entry. Fair value gap, EMA retest. Bro, up candle. Dude, you're entering off of that easily anywhere along the lines of here with the stop loss like below lows or something. And man, you're catching that whole entire up move. Do you see that we never had like a candle closure? Like, let's give an example right here. The EMAs never crossed, but see the candle closure below these EMAs? Bro, why would you take a trade right there? I mean, shit, you would have banked. Like, it doesn't align with your plan. You can get lucky. So, why, if you're using my strategy, why would you take a trade if this big ass black candle closed below everything? Just be patient. What did we want to do? Sweep liquidity, made a high, a low, high, low, boom, broke structure. And then what happens? We have a pullback and a close above the EMAs. You can enter off of that, and you would have banked, dude. Just because, for one, your bias was bullish, you saw the EMA retests. Like, look at this, dude. When did we have a candle closure below the 9 and the 21 EMA? We rejected and bounced off of them so much right there. That is telling us that we want to go higher. We're disrespecting this bearish fair value gap. It's showing us a lot of things, man. So, I'm going to end the video here. That's just a quick video on how I use the 9 and the 21 EMA strategy and how it works for me. If you want more videos like this, you want more educational videos, comment. I would appreciate it. I don't really upload a lot of videos like this. I usually just upload psychology. I want to get into the more educational videos. So I'm going to start uploading a lot about just freaking strategies, about a lot of tips and tricks and what not to do and what to do. You know what I mean? I'm about to be active on YouTube. I'm about to be active on all socials. I really, really would appreciate if you follow my Twitter. If you're watching this, it's just Jonnyoptions with a Z. I'm updating my account challenge on there. I do cool quotes, cool pictures. Just keep up with me on there. I would appreciate it. I wish you the best. Implement this into your freaking strategy. I can promise you, you need to keep up with me and trade live with me in my Discord link in bio. Deuces.